Hello, everyone. This is Socrates. I am here with Tyler Jenks. We're going to be taking a look at the Bitcoin price action along with the stock market, and hopefully we'll have time to take a look at gold as well. So, wondering what everybody else is doing now that Game of Thrones is no longer going to be on Sunday evenings. Well, now you see what we're doing. We're going to be podcasting. So I had a great weekend this weekend. Just telling Tyler, getting my garden planted a little late, but better late than never. And I think it'll be plenty of time to bear me plenty of fruit. So how are you doing, Tyler? How's your weekend?
I'm doing great. Had a great weekend myself. The weather has turned rainy, really rainy. Socrates visited us for a while, and it was in the 80s and 90s, and not a cloud in the sky for 3 or 4 days. But yesterday was rainy. Today in Chattanooga, it's just pouring. It's coming in the windows and all kinds of stuff. So, but lots of interesting things going on. Bitcoin just closed the week and obviously the day. We've got futures already active in the stock market and the gold market. There's big news with a big merger in the defense and space industry. And we'll talk about that briefly, maybe pull up a couple of charts. But why don't we start off with Bitcoin? And Socrates, why don't you take a look at the short-term movements? And I'm anxious to hear what you got to say.
All right, I will share my screen now and pulling that up. Okay. And I will be keeping my brief look on the live chat in case nobody is able to see my screen. Hopefully we won't go an entire show or more than half of one again without having a screen shared. So pulling up Bitcoin here. So taking a look at these are the areas that we have been looking at over the past week in terms of a developing bear channel on the 4-hour chart. Horizontal areas of support and resistance, along with the moving averages, the 50 and the 200 EMAs specifically, along with the 9 in applying Tyler's Consensio rules. So back in here, we were testing the 200 EMA, and I mentioned that this was a buy signal for me. Despite thinking that it was probably going to continue down, I did go ahead and enter a little bit there and was drawing these arrows saying that I was expecting a retest of the 50 EMA, which was in line with the top of this bear channel and this horizontal area of resistance. And then from there, I was expecting a sell-off down to retest the bottom of this bearish parallel channel, which would also be right in line with this bull trend line that I've been looking at, as well as the next major area of horizontal support, kind of right in, actually, I was looking more down in here. Okay, so that's primarily what I have been looking at. Been posting charts on TradingView and Twitter to this effect, and I kind of got scared out of my original projection here, and that was due to seeing Litecoin smashing through the top of its channel and breaking through its similar area of horizontal resistance and getting a bullish cross with its 9 EMA. Let's see if it's not too hard to pull up a chart. There we go. So looking at this, it also created a higher high above this area. So seeing this, I really started to second guess my projection that Bitcoin was going to find resistance here and then sell off down to the bottom of this channel. I really thought that a lot of times Litecoin will be a leading indicator, and when I saw it doing this, that really made me second guess what I had originally thought. So we had a show when the price was right in here. And I mentioned that I like seeing the price kind of get squeezed in between these two moving averages because it represents a good opportunity to just kind of wait for further confirmation, wait and see. I mentioned if it closed above this 50 EMA, then I was going to be expecting it to follow Litecoin and probably even create a new high above this area here. And then I also mentioned that if it closed below this 9 EMA, I would be expecting a return to this 200 EMA at a minimum, and would very likely be calling for this here. And it did close below the 9 EMA on a 4-hour basis right here, June 8th. And it immediately rebounded and closed back above it. And there was actually something that helped us to potentially see that coming in real time, and that was the parabolic SAR. So when this candle here did close below the 9 EMA, I wanted to just look for other indicators to make sure that there's nothing else that I need to be kind of aware of. And the parabolic SAR is often one of the things that will show itself as a last resort of support or resistance. And that's exactly what happened here. So often will you just see it wick down perfectly. Remember, SARs, you do not need to close below it for them to be broken. You just need to actually have the price come below the full thing, just even for a second on a wick basis, and that'll break. So many times it'll happen where it wicks down to like the middle of the SAR and fails to break it. There's just that's a very common, I mean, more common than you would expect. So here, that's exactly what we saw. This came down and hit this SAR, and the price immediately rebounded back above this 9 EMA on the 4-hour chart. I wanted to tweet something about this, but I wasn't by my computer, so I couldn't. So anyways, I just waited to see if this SAR would get broken on a 4-hour basis as a final confirmation of this 50 holding as resistance and this 9 and now being broken down. So we can see we danced kind of right along that area, turning it into resistance before finally breaking the SAR here. And sure enough, that provided a great confirmation that this 9 was broken down and a return to the 200 should be expected. And that's what happened 3 candles, well, actually only 2 candles later. And this action here was very interesting. This was the candle that closed 8 hours ago. This one just closed. This one just opened 10 minutes ago. So 8 hours ago, we had this candle, which came all the way down to the 200 and touched this horizontal area of support that I had, and then just wicked off it strong, kind of like we see over here. And that really intrigued me because from here I see a couple options that I'm always looking at multiple options and preparing for multiple outcomes, and then assigning percentages kind of in my head. So here I see a couple outcomes that are most likely, in my opinion. And the first is the arrows that you already see drawn, is this one breaking down this area. And if 75 breaks down, then I'm going to be confident that a return to 68 would be the next area of support, as what I would be expecting as the highest likelihood from here. However, the next kind of most likely outcome that I could see is a bit of a squeeze between the 50 and the 200 EMAs. Get another bounce up here. If this support holds, if 70, that's not 100% chance that this area of support breaks down at 7,500. So what do I expect if it holds? If it holds, I would expect a bit of a consolidation where it comes up and retests this area of resistance here, maybe even kind of gets up here on a very short-term basis, and then comes back down here. And that would be a bit of a Wyckoff accumulation pattern. We would see the preliminary support right here, the selling climax right here, secondary test here. This would be the secondary test of support in phase B, if I'm remembering that correctly. And then this price comes up and has a bit of a signal of strength breaking through this horizontal. And if it comes back down here, this would be the final area of support, the final area of demand, and that would be potentially a Wyckoff accumulation off of this sell-off here, which on the 4-hour chart is very, I think it's possible, but it's low likelihood that if we do end up finding enough support in this area, then I could see something like this happening, and then we end up returning up to this area. I would give that like a 20% chance or so. I would think that this is about a 70% chance, and then give it like a 10% some sort of other, where, you know, something else happens that I'm not prepared for. So that is my view of the shorter term. I'm going to zoom it out a little bit because we did have some new information that is starting to present itself. And the first thing that I'm starting to look at is this head and shoulders that we're seeing. It's a pretty big pattern that could be, you could include this as a huge left shoulder here. Or you could kind of chop that part out and just say, here's the left shoulder, here's the head, here's the right shoulder. Let's go ahead and throw some volume on, and we do see, if we're using this as the main part of the left shoulder, volume is decreasing throughout. You do have a volume spike right at the top, which is something that I definitely like to see, outside of just the volume falling while the pattern is being created. Having a spike at the very top is something that is very interesting and certainly okay with me. So we do not necessarily have the best volume profile for head and shoulders, but it certainly is acceptable with most of the volume over here. And let's go ahead and take a look at what that would be, what the measured move would be. Go ahead and close out some of these indicators and draw a line from here down to right about here, and move that to right about here. And that gives us a measured move down to 59.77. And the neckline is the same area of horizontal support that I've been keeping my eye on. So I just gave some percentages, and I definitely need to amend those, because I would say that there's maybe a, let's say, 30% chance if this breaks down that the head and shoulders target gets reached down at 59. Let's call it a 40% chance that it finds support at my area of trend and horizontal here, and then the rest would be 10% other, and then a bullish sort of opportunity. If we do hold here, we're unable to close below this 75 area, then that would be potentially, would watch for this top of this channel to get broken through, and then to get some buy signals from Consensio here. So one other thing that I want to say is how I determine short, medium, and long-term trends. Tyler talks about how his short term is going to be days to weeks, medium term is weeks to months, and long term is generally years. And for me, the way that I look at it is my short-term bias is based on the 4-hour chart. My medium-term bias is based on the daily chart, and my my long-term bias is based on the weekly chart. And I use the 50 and the 200 exponential moving averages to determine that. So as long as these are in a bullish crossover and the price is above the 200 EMA on the 4-hour chart, that tells me that I need to be bullish short term. So even though I'm seeing a lot of reasons not to be bullish and a lot of reasons to be bearish, I need to hold out and wait for further confirmation, because I need to be short term bullish as long as these are in a bullish posture. For the medium term, I need the 50 and the 200 day moving averages to be in a bullish posture. So I'm medium term bullish as long as that is the case. And then for long term, I use the weekly 50 and 200. In traditional markets, for crypto, there generally isn't enough history, so I'll tend to use the 9-week and the 50-week EMAs for my long term bias. So I have to stay bullish based on the way that I trade, as long as these are in a bullish crossover with the price above the 200 EMAs. And when we're getting really close like this, and I am seeing a lot of signs of reversal, then I'll kind of start to zoom in, because it's basically going to be like dominoes. First, the 15 minutes going to cross, then the hour, then the 2-hour, then the 3-hour, before the 4-hour can have bearish crossover, death cross, with these moving averages telling me to turn bearish. Well, it has to happen on shorter time frames, and it's got to do it in kind of like a domino fashion. One has to happen before the other. So here we just kind of look at the 3-hour, and it looks like it is getting awfully close. We do see this 200 EMA acting as solid resistance. That does look like an important boundary. We found resistance at this 50 as well, and it is posturing for a cross. That's something that will be important to me. If we can somehow avoid that, then I would be much less, I would think it's much less likelihood that the 4-hour is going to do it. So what do we have on the 2-hour? Basically, this cross came when the price was significantly below it, and then it pulled back into it, and that area held. That's just an ideal sell signal for me, seeing these spread out, this pull into it and hold. That's just absolutely beautiful. And so we do kind of see the dominoes starting to fall. Just fell on the 1-hour, fell on the 2-hour, all the way down the line from there. If those are bearish, then we can be confident that the others are. And sure enough, so basically all the way down the line, the next up would be the 3-hour. So I am staying bullish short term, but very, very tentatively. I think it's most likely that we do break down, but I don't think it's time to be entering any positions. Even if we do break down, I'm not in love with shorting this area at all. I do think that we have entered, we're showing the first signs of a bull market. And as long as we're seeing a bullish trend from the moving averages, I want to be buying dips. I don't want to be selling breakdowns. I really want to be trading with the trend, unless there's a very high probability setup, which this to me isn't really, because there's just support all the way down. If we break down 75 right here, we've got some support at 71 to 72.50. If that breaks down, we've got more support at 7 down to 68. So all the way down, I think that I want to be buying. If we do break down, then I'm going to be waiting to buy. My first area to buy is at 68. I've been tweeting about that, mainly due to this horizontal and this trend line. And then the next area I would be looking at is 6,000. If we can get the target of this head and shoulders, I think that that would present a great opportunity, and that is going to be based again just primarily on the horizontal area of support that pretty much everybody knows about, right in here. So I find it very interesting when targets from patterns line up with horizontals. and that's something that I want to be paying very close attention to. So that is my analysis on the short term. The weekly certainly isn't looking too good, and I will leave that to Tyler to talk about unless there's anything you want to say here.
No, those are great points. If you just pull the 4-hour up for one more second, and we are working right now on a candle that is slowly working its way below your long term on the 4-hour. How would you interpret it if we close this 4-hour below that? Is that significant, or do you need more of a confirmation?
That's definitely going to be very significant. As you can see all throughout here, we failed to close below. Even on this very last candle, it got way down here and just would not, it refused to close below that EMA, which to me is very interesting and something that I want to see. We saw it back here, got all the way down, refused to close below. And that is telling me that there's a lot of demand here. Seeing this wick and seeing this close above tells me that this 200 EMA is acting as support, and support will continue to act that way until it doesn't. And at that point, it will likely become a resistance. So here, absolutely, if we do close below this 200, that would be very significant to me, especially kind of seeing a whole body below if that's what happens. What will be most important is this area of horizontal, which is at 76.50, we'll call it. I'm going to move that down just a hair. 76.50. That is what is most important to me. The horizontals are more important to me than moving averages, which are more important than trend lines. So I'm always about these trend lines, these moving averages, and horizontals. And horizontals are most important to me. So having a close below this EMA would be very important, but being that it's still in this green box that's basically represents support, that would be the most important factor to me, especially seeing this 9 EMA all the way up here and the 50 still with a decent spread. That is telling me that it's going to be hard for this price to get too far below here until these cross. And if it does, then I would expect some sort of rebound as those are crossing. So seeing price below the 200 EMA or the long moving average on my Consensio with the moving averages in a bullish crossover, that is generally what I'm going to be looking at as a buy signal. The price will refuse to stay below here for very long, especially if there's a lot of support. And then sometimes, you know, I say refuse, it resists. It doesn't refuse. It can do anything at once. It'll just resist going against these moving averages. It's based on math. And until you get these crossovers, it's going to be like a magnet. So that would be important. That would be very it's bullish seeing these continue to close above, and is very important to see them close above, but a close below would be kind of the first step to seeing this area of support breaking down. And then I would be looking for that more confirmation. A close below 74.50 would be the most important thing for me right now.
Terrific. That's great stuff. I'm going to look at intermediate and long-term using my longer view of things. And we'll do that by coming over here and pull up my Bitcoin chart. Okay, so this, remember, I'm using the 2, 7, and 30 week. This is my weekly chart, which is what I make my decisions off of. I look at all the shorter terms and longer terms, but this is my key chart on not only Bitcoin, but all the asset classes. Remember that I bought back here on the basis of the longer term turning up, which had not happened in over a year, but it is now, and that's very bullish to me. I find it interesting that we did not take out the setup trend line, even though we tried 3 weeks in a row. Got up over it on number 8, the green 8. Then we have this 9. Now we've got a 1 that is working its way lower from the body of the 9, but that just started. We're now at 75.57, so it continues to sink as we talk. Let's just take a quick look at the 30-minute to see what's happened in the last candle. Yeah, so it's coming down. This is the 30-minute candle, and it will end in about 3 minutes. And when you take a look at that, you see that the long term on the 30-minute has been coming down for some time, but the intermediate term and the short term have been messing around, crossing each other back and forth all the way down. They crossed positively here, crossed positively here, crossed positively on the 6th candle after these 2 big 1 hour total bounces off of the lows that Socrates just talked about. But we are quickly sinking down again. So going back to the weekly, what am I seeing? Basically what I'm seeing is the 9 on the sequential on a weekly basis is doing what it's supposed to do, 1 to 4 week pullback. I am still very interested in the low 6,000s to re-enter the trade that we got out of at 8,800 on half-hour position, and we are still holding the other half long. Why? Because Consensio, not Hyperwave or not other technical tools, just Consensio using the 2.7 and the 30 is in a full bullish posture. What we have just done, though, and it's very difficult to see, but if you look at the short term and the intermediate term, they are crossing right here on this new weekly candle that's only 30 minutes old. And because of that, there's no way to stop it unless this candle moves up. Now, those that follow Consensio, the way I interpret it, means we're still fully bullish. The only thing that's happened is price stopped going up with the high on the 8 candle and then collapsed and engulfed these 2 candles basically by the time it got to the bottom, and now we're headed lower. But there's been no damage done on a weekly basis to the bull market in Bitcoin. But that can change very rapidly. And what I mean by that is if the price, which is now below the intermediate term, stays even where it is, and the short term cuts down through it, that's my first signal to be cautious, meaning take 5% out of a trade. Well, I've already taken 50% out of this trade, so I'm way ahead of the game from a Consensio point of view. But if then price continues down, what will happen is the intermediate will turn down also. And that will get me up to the 25% kind of a number. So 25% of X. Remember, I only put 20% of X in the trade. I took half of it out, so I'm only 10X in, because I believe that this uptrend that we are in from this low is an intermediate term move. And the possibility is that that intermediate term move is ending. But it's way too early to make that call. it might end up at 9,000 or 10,000 or 11,000 or 12,000 and still be an intermediate term trend. I want to make it very clear. The only reason I'm overriding Hyperwave with Consensio is because Hyperwave does not care about this action. It doesn't even speak to it. None of the rules of Hyperwave will give me any new information. Hyperwave still is saying we're going down to 1,000. I know that a lot of people are irritated with that, but that is simply the fact. The fact is that 400 and some odd times in a row it has worked and gone back to the beginning of the Hyperwave. In this case, that's 1,000. If it's on some other stock or index, then it's wherever that phase one line was. The phase one line on this entire pattern is 1,000, and that has not been negated. So now all of a sudden I'm in the hands of Consensio, and Consensio is fully bullish even with this action. But let's just assume for a second that this intermediate term move, intermediate meaning relative to the entire multi-year formation, this intermediate term move, what was very exciting, could be ending. And it might be ending on a 9. And this 1 to 4 weeks could turn out to be a full 9 in the down position. That's getting ahead of ourselves. We don't know that. Money management and technical analysis are incremental with new information that comes in every day, every week, every month. And if you get ahead of yourself, or you have a predetermined notion of what's going to happen, such as this is going to the moon, then you are going to find yourself in very rare cases correct. And the rest of the time you will get wrecked and it will wipe out your luck. You must let the analysis dictate what you are doing. And right now, the only analysis I have is, number one, we've got a setup trend all the way down at 4,900. We had a setup trend that could have been broken to the upside, but was not. It failed in 3 weeks in a row to do what it needed to do to negate that. And then we had a sequential 9. Now we've got price moving down, turning the short term down, crossing it through the intermediate term, and the price is now crossing through the intermediate term. That does not mean anything for Consensio. That's a yawn and a stretch. You have to wait for further information. But you just heard Socrates on lower time frames begin to get evidence that the upside is struggling even at the shorter time frames. Forget the long and intermediate term, even on the shorter time frames, with potential targets down to 6,800 and maybe as low as 5,900 if you interpret the shorter term as a head and shoulders, which I do also. I think Socrates is right on. So now we've got the potential, and that's all it is, something to be aware of somewhere between 5,900 right below this green line and the low 6,000s up to about 6,800 is a possible target for a 1 to 4 week drop on the sequential. Now we just have to let it play out step by step. I right now will be buying this intermediate term move because it's so far above the long term, my 30 week. The 30 week I have is down at 4,800. Now Tone and others more and more that had been completely bullish have gotten less bullish and now are looking for some downside targets. With Tone still thinking 4,000, my feeling is if we get all the way down to 4,000 on a closing basis, we're going down to 1,000. It's not going to stop at 4,000. There's not enough support there. Hyperwave will then take over, because what will happen to Consensio if we drop down to even 6,000 or 6,500? Just think about it for a second. You will have the intermediate and the short coming down behind the price, and you are going to be getting closer and closer to the long term. Now it will be essential for the price to hold 6,000, let's call it 5,800 to 6,200 or 6,300. If that does not hold, then my intermediate term up that I've just described is over. And now the long term takes hold again. Now, I made a comment the other day, and there was a number of people that got confused by it, which is, okay, Tyler, if this is an intermediate term move that can take us from 3,000 to 9,000, which it did, 300%, 200% profit, 300% move, then why can't you admit that this is a new bull market? Well, I've just explained that, I hope, from my perception. And it would not surprise me to see this come down to 6,000 or even to 5,000 or 5,700 or 4,000, as long as it doesn't go to new lows below 3,100. If it comes down anywhere in this territory, then it is ripe for another intermediate term move up, which could go higher than this one or lower than this one and still be intermediate term. By my definition, that's weeks or months. Why do I call this intermediate, not long term? Because it hasn't gone on long enough to be considered long term. It's still only 1 2 3 4 1 2 3 4 2 1 2 3 4 3 1 2 3 4 4 1 2 3 4 5. It's only about 4.5 or 5 months long from bottom to top, which puts it in the category for me of weeks and months, not months or years. So you could get another intermediate term move, which I expect, and then another intermediate term move, which I expect. I think this goes on for a long time. Why? Because when you study hyperwaves, you know that when a 1 2 3 4 is broken, it takes years sometimes to get to where you're going. And I will point you all to General Electric to see how many years it took. I would point you to the Japanese stock market to see how many years it takes after a break to heal the wounds of a hyperwave. So in any case, I'm still bullish here. I still think that we could hold and go up from here. Why? Because Consensio says that. The more damage you start doing to Consensio by bringing price lower than it is right now at 7,500 to 6,000, the more dangerous the situation gets. It has not gotten there yet. It is still fully bullish. So that's the way I'm looking at these charts right now. I noticed that the RSI has turned down, as we mentioned, when it was only a little bit down here, then a little bit more. Now it's coming down very strongly, which is what you expect when you get into an overbought position. What's important here is that occurred right at these highs, right at the setup trend line, right at the 9 on a sequential, and now we're beginning to disintegrate the bullish, fully bullish nature of Consensio, but are a long way from it. So any observations from you on this chart?
I guess just a couple of questions. I know that you were thinking about getting out of the remainder of your long exposure and recommending clients to do the same. over the last few days. Can you walk us through your thought process on why you didn't do that?
Yeah, and I'll do that by going to a lower time frame, the dailies. This has concerned me. And remember what this line is. This is actually the phase 2 line of Hyperwave, going all the way back, all the way back, all the way back. It's a very, very important line. And we did get above it for some time before we broke down. And on the weekly, we got above it just barely. And from an intermediate term point of view, we didn't stay above it long enough for me to consider this an actual break, and now we're below it. But that was a 2.5, almost 3 week break, which is fairly significant to me. I'm disappointed it could not get up higher and at least get to this 10,000, 9,400 Fibonacci line. Do something above this line to show that this was a real break and not a bull trap. I now think it might be a bull trap, not because of a phase line, but because of breaking a angular trend line that goes back for 2 years. That's a beautiful definition of a bull trap. And the length of time was approximately right to trap a lot of people in above it. So why didn't I sell there? Well, because we're just sitting on the intermediate term trend, which is moving up like a rocket ship. It wouldn't surprise me at all on a daily basis or on a shorter time frame to get a significant bounce back up to here, which is around the 83 or 8,400, and not be able to get back above it and then drop away. I would love to sell the remaining portion, but I'm a little embarrassed to do it unless I can do it over 8,000, which that's just a personal thing. And this has gotten away from me too quickly. And I'm still fully bullish on the weekly basis based on Consensio. So as long as I am still fully bullish and we're way above the long-term moving average and I find a lot of support at 6,000, I would prefer to keep my mindset that I will be a buyer below 7,000, below 6,800, below 6,500. And I might revise down because of that head and shoulders to let it get as low as 5,900 before I put a stop in. Originally, we had stops right around the 5,950 for the existing positions we have. But I think there's a chance we could cut through this green area between 63 and 58. And if we don't do that, I don't want to get scared out before another big move starts. Remember, we've only got 10% of X in this market right now. I tiptoed in, we got out of half of it, and now I'm looking to go 20, 30, 40, 50% long down in this area around 6,000. So not a great explanation, but that's kind of what I've been wrestling with.
All right, so it sounds like we're both interested in buying the about 6,000 to 6,800 area is where we're seeing a lot of support and kind of expecting this thing to pull back. Not maybe it's a little too early to call for that since the horizontal has not broken down just yet. However, we do not want to necessarily be making any moves in this range. At least that's how I'm feeling. Is that what I'm hearing from you?
Yeah, that's almost exactly what I'm feeling too. If you're not impressed with the movement of Bitcoin over the last 2.5 months, then you're asleep. And a lot of people accused me of being asleep and waiting to buy at 6,000, but that's that's the way I invest. I never try to pick bottoms. I do try to pick tops because by definition, by picking a top, you get out. If that wasn't the top, you lose opportunity. You don't lose any money. But that's not true at the bottom. At the bottom, you're guessing. You can use all the technical or fundamental analysis you want, but you're putting real money to work. And I won't do that with myself or my clients. Okay, I think we beat Bitcoin to death. Do you want to take a quick look at Litecoin? Is that following suit in the last 30 minutes? I haven't been following it.
Yeah, I can pull that
just,
up.
Just to see what, if Litecoin and others begin to break down here, that will be important information to me.
Yeah, absolutely. And that is something that I am keeping my eye on as well. And something that I'm seeing is that Litecoin has been significantly more bullish than Bitcoin at every step of the way. If you look at the left two charts on my screen here, that is actually, I can do this. And you guys might see my note there. And can't forget to call my mom on Sunday evening. So got that reminder up there. But here we go on the two charts, Bitcoin and Litecoin, both the USD pairs. Notice how Bitcoin is well below the 50 moving average, exponential moving average, and it has rolled over and acted as resistance. Whereas we see basically the exact opposite with Litecoin. It has broken above the 50 EMA on the 4-hour and has turned it into support and is wicking off of it in a bit of a bullish manner. And it is above this trend line here that was the parallel channel that we see Bitcoin remained below. So while it has been kind of pulling back over this last about 24 hours or so, it is still painting a much different picture than Bitcoin, with a potential higher low, a higher high that's already been established, a fully bullish 50 and 200 EMA on the 4-hour chart. So that is a much different picture. The question remains is, will it be enough to actually, is it going to be leading the market? Is it a bellwether right now? Is it going to be blazing a trail for Bitcoin that it can follow and break above this major area of resistance? Or is this just going to take a little bit longer to roll over, since there's more sort of support, since there's a stronger rally here and now there's more built up support? It may just take longer to roll over. But like you said, I will be keeping a close eye on this, and it will be important to me as well if we do break down this 50 and then get a bearish crossover here. That is going to be important information that I want to be aware of. And for now, I don't think there's a whole lot that we can be gleaning from this picture outside of that. I think it's interesting what a divergence we're seeing with Litecoin showing a much more bullish posture, and Bitcoin showing signs of rolling over. I fully agree with you that if Bitcoin is pulling back, then Litecoin USD will almost certainly as well. But if it is able to hold support here on Bitcoin, if it is able to support here at the 75 to 76 area, then potentially Litecoin is a bit of a bellwether that is going to help us to see that ahead of time. So something to keep an eye on is it going to stay bullish, or is it going to roll over as well?
Great. Let's move on to the S&P. The futures opened a couple of hours ago. They are positive. It has to do with a lot of things, but partially because of the fundamentals after the close on Friday, with Mexico and the United States looking like we've averted a tariff situation, and we'll see how that sorts out. But if you could maybe pull up the your S&P futures chart. We'll just take a quick look at that, and then we'll take a quick look at gold, which is backing off. fairly strongly. The futures were down about $7. So let's take a look at the S&P.
All right. I actually have the Forex pair pulled up, which I use, which is
Great.
same time frames. It just opened this week, and it has started to pull back, which we about an hour ago were seeing some bullish price action. So that makes me really want to zoom in and see what happened here. Yeah, we had a strong open. I believe that this would have been, nope, this is not going to be the same time frame. It doesn't look like. So let me try to pull up the futures chart that you were asking for with the continuous contract in front. Here we go. So taking a look at the daily, so it did kind of gap up. We see the open was at 28.86 after last week closed at 28.75. So it does open on a gap up, and that is likely due to the news that Donald Trump is going to be backstepping on the tariffs, potentially. He's happy with what Mexico will be doing to resolve the immigrant situation. So he's, it sounds like, going to be putting that on a bit of a moratorium, and the stock market reacted favorably with a gap up here and then a strong rally. It opened at 28.86 and then rallied up to 28.94, 95 or so. So that was up significantly from the close, about 20 points from last week's close, and now it is started to fully come back.
Yeah, and I also notice on that chart that it looks like we took out the prior high, not by much, but it is a higher high. So that means that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 days ago. After the big sell-off, in 5 days, we've made it all the way back to that high. So tomorrow will be a very important cash opening at 9:30, and we'll see if it can hold any of these gains or if it slips back from this area. That looks very exciting to me. And why don't we just close out with the gold chart? As everybody knows, we've been talking about the potential of a 5-year consolidation in gold getting ready to break out to the upside. But the big problem with gold is that every time it gets up to 1380, it fails. We've only made it to about 1350 this time around. So,
and I will pull up that chart in just a second. There's just one thing that I wanted to just out show how I mentioned earlier that it might have been a little bit confusing, but this shows it really well. How when the price is below the moving averages that are in a bullish posture, that it can actually be a bit of a buy signal, and you would expect price to that these to kind of act as a magnet as the price falls below. So here we see a golden crossover on the 50 and the 200-day EMAs, and the price comes below them with a significant spread. This is much different if this 50 EMA is like down here and very close to crossing. When it's way up here, that's significantly far from crossing. It's going to take a while for this to cross this when it's this spread out. So when you've got a significant spread on these EMAs with the price below, it can actually be a bit of a buy signal. And that's kind of what we're seeing on Bitcoin now on the 4-hour, where the EMAs are still in a bullish crossover and still have a bit of a spread. Let's go ahead and pull that back up really quick. You see, still have the 50 above the 200 with still a bit of a spread. They're not very, very close and getting ready to cross right away. And then when the price falls below that 200, it just really struggles to stay there. So that's something that I just wanted to point.
Yeah, that's a very good point. That's interesting. You mentioned that before on Bitcoin, but seeing it with the S&P, makes me feel even better that we've got a possibility on Bitcoin of getting back up to or above those old highs, because all of the moving averages are still very bullish on Bitcoin. And then there's the gold chart, the magic gold chart.
Here is the area that Tyler had mentioned. I'm assuming what is labeled will be pretty similar. So my area of resistance is about 1370. Let's adjust that just slightly to, I'm looking at these. I like seeing the wicks in these boxes that I draw and closes outside of it. So that's why I adjusted it there, to the bottom end being about 1346. And like you said, we have tried and tried and tried to get through and failed on basically every occasion. However, what is very, very interesting is, what is the response? Are we getting responded with a equal and opposite reaction down to retest prior lows? Are we making new lows, or are we making higher lows? We're clearly every time making higher lows. So we're resisting and support is moving up. Resisting, support moves up. Resist, is support moving up here, and now we try again, and it looks like we could be resisting. It's still too early for me to say that. I would look at about a 50% retrace on this bullish Marubozu as a confirmation that we did actually resist, as long as we stay above 1325. I'm not certain that this attempt has failed yet, so I still would be holding out a little bit of hope, but this is not a good open. This has opened and followed through. We kind of saw the S&P have a good open and reverse. This one's had not a good open and has continued to kind of pull back from 1340 down to now 1335. So there's a couple things that we're looking at, and one is this pull back and into the golden cross with the 50 and the 200 week. That is very significant, a potential cup and handle that has been forming right here. Could label this as a bull flag here. So a number of bullish patterns are showing up, which makes me want to say that this area of resistance is going to finally break down. Seeing these higher lows tells me that support is winning. It's continuing to move up, but resistance isn't necessarily continuing to move down. I mean, this is a little bit of a lower high, but nothing near as significant as we see on the higher lows. So that tells me that there's more buying pressure than there is selling pressure, and that the resistance can only hold for so much longer before these higher lows are going to be such that a breakthrough occurs. So it's a very interesting spot, and I am leaning towards thinking that this is going to break out to the upside due to bullish moving averages and bullish patterns and these higher lows. However, again, I don't think that this is a buying or a selling opportunity until we really break above the 1375 would be the area that I think would be a very, very attractive buying opportunity right here. And in terms of selling, I am not really interested in selling against these higher lows. I am holding on to gold, and I am confident about my position and will remain that way as long as these moving averages are in a bullish posture, despite this mess that we see. Eventually something's got to break, and multiple higher lows and flat resistance tells me that something could break soon. So that's
great.
What are you?
That's good. I agree with all of that. And tomorrow will be a very interesting day for all of these asset classes. Once again, the reason we're looking at them is I think these are the three most important asset classes going right now because they all relate directly to the problem of world debt in one way or another, and they are potential solutions to that problem. So I'm looking out 5, 10, 20, 30 years, and these are the things that have my interest at this point. And whichever one wants to be the winner, we will be riding it. And with that, we're hitting 9 o'clock right on the button. That's all I've got. Any last words, Socrates?
I think that that's about all that I have. I'll be very interested in seeing what happens over the next 24 hours or so, and we'll look forward to our next show.
Terrific. Very good. Thanks, everybody. Don't forget to call your mother.
All right. Thank you.
Okay, bye-bye.